Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. What if I told you that nearly 3 billion XRP quietly vanished in just 2 days? No headlines, no alerts, nothing. You probably think it's clickbait, but it's not. This is the kind of data that makes markets move before anyone even notices. Welcome to the Crypto Republic, where we go deeper than the charts to find out what's really happening behind the blockchain curtain. Now, here's the shocking part. Binance, the world's largest crypto exchange, saw its XRP reserves collapse to around 2.74 billion XRP, the lowest level in a year. That's down from over 3 billion XRP only weeks earlier. In dollar terms, roughly $736 million worth of tokens vanished from Binance books almost overnight. So what's really going on here? Are whales quietly cornering the XRP market? Are we seeing a liquidity crunch before the next major price surge? By the end of this story, you'll understand how this disappearance might redefine XRP's supply and why some analysts believe a storm is building beneath the surface. It all started like any other research section, late night, coffee in hand, scrolling through on-chain dashboards, and then that sudden double-take moment. Binance's XRP wallet graph was falling off a cliff. Not a tiny dip, not a glitch, a clear, steep drop that screams something's up. For context, Binance's reserves hadn't been that low since mid-2024. When you're dealing with billions in assets, that's like seeing the world's biggest bank misplace an entire vault. And Binance wasn't alone. Upbit, one of South Korea's top exchanges, saw reserves drop from 6.12 billion XRP to 608 billion XRP. That's 40 million XRP gone in days, worth about $105 million. Then came Coinbase, which recently relisted XRP. Their cold wallets down 96.59%, now holding just 32 million XRP total. Practically empty. Three of the world's biggest exchanges all seeing their XRP drain within weeks. It wasn't a coincidence. Something coordinated was unfolding. When coins leave exchanges in bulk, two possibilities usually emerge. One, panic withdrawals, investors fleeing because they've lost confidence, or two, fiction holders moving tokens into self-custody because they believe in long-term value. In this case, the pattern pointed towards the latter. The on-chain data showed consistent outflows, not chaotic spikes. It looked strategic, like whales locking away their treasure before the tide changes. There's an old saying in crypto, not your keys, not your coins. And lately, more holders than ever are taking that literally. Think of it as a digital gold rush. Miners hauling bars out of the exchange vaults and burying them for safekeeping. When the available float shrinks, market mechanics change. Less supply on exchanges means lower sell pressure. And if demand spikes, you'll get what traders call a supply shock. It's the same principle that sent Bitcoin flying in 2017 when coins dried up on exchanges, right before the bull run. So if everyone's pulling XRP up the market now, are we staring at the setup for another historic squeeze? To find the answer, you have to look at who's doing the moving, not the retail crowd. The data fingerprints belong to big wallets, the kind that ripple through markets when they act. According to on-chain analytics from Sentiment, wallets holding between 1 million and 10 million XRP, the so-called mid-tier whales, pumped roughly 140 million XRP right after the token's recent rebound from $2.36 to $2.63, about an 11% uptick. At first glance, that looks bearish. But dig deeper, those whales sold into strength, locking profits after the rally. Classic trader behavior. Take a slice off the top, reload lower. Meanwhile, overall exchange balances still kept dropping, meaning those sold coins were instantly scooped up by other buyers and then taken off chain again. Enter the biggest twist of them all, a digital asset management firm named Evernorth. Practically unknown a few months ago, Evernorth has suddenly become one of the XRP's biggest holders. Their stash exploded from under 100 million XRP to nearly 389 million XRP in days, roughly 1 billion at current prices. And the timing perfectly aligned with those massive two-day outflows. Over 2.6 billion XRP withdrawn between October 19th and October 20th. That's not coincidence. Something's going on. It's as if the whale size of a blue chip fund decided to empty the ocean while everyone else was still checking the tides. Historical echoes. History loves to repeat itself, especially in markets. Back during the late 1800s, during the gold rush, merchants noticed something fascinating. Every time miners hoarded gold dust instead of spending it, local prices rose. The less metal in circulation, the more value each grain held. Fast forward to 2025, and XRP might be experiencing the same dynamic digital scarcity born from human behavior. When long-term holders bunker down, supply thins. And scarcity combined with anticipation is rocket fuel for prices. Think of it like musical chairs. As long as the music's playing, everyone feels fine. When you stop, You realize half the chairs are missing, and suddenly everyone's diving for a seat. In this analogy, those shares are XRP tokens. Market analyst Ali Martinez highlighted this very pattern, noting that mid-sized whale selling doesn't negate bullish accumulation. It's part of market rotation. He suggested that whales might simply be locking in short-term profits while still positioning for long-term upside. Other data firms echoed that sentiment. Sentiment reports framed the current setup as a textbook pre-bull run consolidation, where supply drains quietly before liquidity returns with a vengeance. Even institutional chatter supports it. Several fund managers have hinted that they're building XRP exposure ahead of the November 13th spot ETF launch window. That event unlocks broader demand and supply keeps tightening. The price mechanics could mirror early cycle Bitcoin or Ethereum phases when scarcity met sudden attention. Here's the psychology of scarcity, and here's where it gets real psychological. Markets don't move purely on math. They move on emotion, fear, greed, scarcity, and FOMO. When people realize something's disappearing, the urge to grab it, what's left, it multiplies. That's why data like the 2.6 billion XRP disappearance matters. It's not just a number. It's a signal that behavior is changing. Retail investors follow headlines. Whales follow silence. And right now, the silence is deafening. It's reminiscent of 2020 when institutions quietly accumulated Bitcoin under $10,000, while mainstream dismissed it as boring. 6 months later, Bitcoin broke $60,000. History doesn't copy itself, but it rhymes. Now, before we all grab our moon suits, let's ground this in reality. None of this guarantees that XRP will explode tomorrow. Markets can be unpredictable, and whales can shift strategies overnight. Some might even dump to shake out weak hands before buying back cheaper. It's an old game, as old as trading itself. And yes, there's the regulatory backdrop, ongoing clarity battles, ETF speculation, and macroeconomic uncertainty. But here's the key takeaway. Supply tells a story long before headlines catch up. So whether XRP moves next week or next quarter, the on-chain footprint already shows who's confident enough to hold when no one's watching. Here's some lessons from the past. Back in 2013, Bitcoin faced a similar narrative. Mt. Gox withdrawal spike coins vanished from exchanges and people panicked. A year later, that scarcity set the stage for the biggest bull cycle in crypto history. Every asset that achieves real scarcity passes through a moment of disbelief, when the data says one thing and sentiment says another. XRP may be standing at the crossroads right now. Imagine the tulip mania on the 1600s flipped on its head. Instead of oversupply driving a bubble, undersupply could drive the next breakout. This time it's data, not hysteria, leading the charge. So here's the big picture. What does this mean for the average XRP holder? It means preparation beats prediction. Keep your assets secure. Diversify your exchange access. Understand where your coins actually live. Because when liquidity tightens, speed and strategy don't matter. Think of it as a port in a storm. You don't want all your ships docked in one harbor when the wave hits. The smartest traders, the ones tracking these flows, are already positioning that way. And maybe, just maybe, this 2.6 billion XRP disappearance isn't a warning sign at all, but the quiet prelude to the next phase of digital asset evolution. So to sum it all up, Binance reserves plunged from $3 billion to $2.74 billion, a $736 million outflow, up bit, and Coinbase mirrored the trend. Evernorth accumulated 400 million XRP, linking perfectly to the 2.6 billion XRP two-day drain. Mid-tier whales took profit, but total exchange supply kept falling. Analysts like Ali Martinez and data from Sentiment suggest accumulation, not exodus. Add it all together, and you get the early tremors of a potential supply crunch, the kind that can redefine price floors when demand returns. So whether you're a trader, investor, or just a crypto curious, the takeaway is simple. Watch what the smart money does, not what the headlines say. This has been the Crypto Republic, where we connect the data, decode the noise, and uncover what they're not telling you. If the story opened your eyes, share it with someone who still thinks XRP is just another altcoin. Because when 2.6 billion XRP vanishes in 48 hours, it's not just a story, it's a signal. Stay sharp, stay decentralized, and I'll see you in the next one. This opened your eyes. Smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.